Now look into the next question. Next question. X is a chartered accountant by profession. He gives the following information pertaining to October 2021. Consultancy given to different clients during October 2021 but not including the transactions given below. Invoice value 35,70,000. Okay. So different clients, invoice value 35,70,000. Consultancy given to A Limited, invoice value 8,000, market value of supply 50,000. X holds 40% shares of A Limited. So holding 40% shares of one company is not a related party transaction. Related party, so will come into picture only when there is control. Control is said to exist only when the investment is more than 50. So in case of 40%, so the related party transaction should not be applied. Okay. So what if it is 60%? If it is 60%, then related party will come into the picture. Okay. So in case of related party, what we need to do? We need to take open market value. So what is the open market value? The open market value is 50,000, because in case of related party transaction, the valuation needs to be done as per rule 28. So rule 28 talks about the valuation. Transaction value not applicable. So value equals to transaction value if two conditions are satisfied. Price must be the sole consideration. Supplier and recipient are not related. If they are related, then transaction value not applicable. Then we need to determine the value as per rule 28. As per rule 28, we will take open market value. If open market value not available, like, kind and quality. If that is also not available, cost plus 10%. If that is also not available, residual value we will take. And if recipient is eligible for full ITC, then open market value is nothing but the transaction value. Also, alternatively, what we can do? We can take resale price into 90%. So whatever is the price at which that related person is subsequently selling to an unrelated buyer, into 90% also can be taken at the option of the supplier. So in this case, open market value is given as 50,000. So that will be taken. So first 37,50,000, then 50,000. Then consultancy given to B, invoice value nil, market value of supply 48,000. B is not a relative of X. So then should we pay any GST? No. So first of all, when there will be supply under 71A requires consideration. In this case, there is no consideration. So 71A will not come. Okay. 71B also will not come. 71AA also will not come, because all these requires consideration. So supply is included, what are the activities that are treated as supply is given under 7 subsection 1. 7 subsection 1 clause A says any activity for consideration in the course or furtherance of business. There is no consideration, therefore it is not a supply under 7.1A. Then 7.1AA is there, any activity by a person other than individual to its members. So between them, that is firm to partners or company to the shareholders or unincorporated association to the members, if there is any transaction, that will be coming under supply 7.1AA. So there also consideration is essential. 7.1B, import of services for a consideration, whether or not in the course or furtherance of business. So there also consideration is essential. So there is no consideration, then we need to apply 7.1C. 7.1C, 4 activities. DRIP. D for disposal of business asset on which ITC is availed. Is it disposal of business asset on which ITC is availed? No. We don't have information. Okay. R, related party transaction. They are not related parties or distinct persons. I, import of service from related person. No. Principal agent transaction. No. Consequently, it is not a supply, because it is not covered under 7.1A or AA or B or C. Due to that reason, it is not a supply. Okay. So that's why nil. So this is the note that we need to write. Explanation properly we need to give in the exam. Okay. So for giving that explanations only, they will be awarding marks. Then next one, consultancy given to B, we discussed. Consultancy given to Mrs. X. Mrs. X. So who is the supplier here? X. Ex-wife will definitely be treated as related. So what is the meaning of family? So in related definition, family is there. What is the meaning of family? Family means spouse and children, whether or not dependent, brothers, sisters, parents and grandparents. if they are wholly and mainly dependent on that person. Okay, so here wife will by default be treated as related and need not be dependent on that person. Invoice value nil, market value of supply 75,000. Mrs. X is not dependent upon X. Even if Mrs. X is not dependent upon X but treated as related, in case of related party we will be treating it as supply under 71C, and the value will be determined as per rule 28, which is nothing but the open market value. What is the open market value? 75,000. So that will be taken. Okay. Then consultancy given to C, younger brother of X, invoice value nil, market value of supply 60,000. C is not dependent upon X. Brother is treated as related only if they are dependent. So here brother is not dependent. When brother is not dependent, it is not treated as a related party transaction. When it is not treated as a related party transaction, then GST liability will not arise. Okay. Then next one, consultancy service given to D, elder brother of X, invoice value nil, market value 70,000. D is dependent upon X. Brother dependent upon person will be treated as related. So therefore we need to take 70,000 rupees open market value. First it is supply, and once it becomes supply, the value will be determined as per rule 28, that is 70,000. Then next, consultancy given to E, an employee of X, invoice value nil, market value 80,000. Sir, employer, employee are treated as related persons. Okay, we have 9 relationships in the related party. So who are treated as related is given under explanation to section 15. What does it say? Such persons are officers or directors of one another's business. That is, in my business you are appointed as officer or director, and in your business I am appointed as officer or director. We both are treated as related. Such persons are officers or directors of one another's business. Number 2, they are legally recognized partners of a firm. So partners of a firm are related, but the firm and partners are not related. They are employer and employee. Employer and employee are also treated as related. Number 4, such person, that is any person, owns, holds or controls 25% or more of the outstanding voting stock or shares of both of them, which means there are 2 companies. These 2 companies have a common shareholder who is holding 25% or more. So then those 2 companies will be treated as related. Number 5, one person directly or indirectly controls the other. So control is not defined. In usual parlance, control means investment greater than 50% or majority common board of directors. Then point number 6. Point number 6 is they are under the common control of a third person. There are 2 companies having a common parent company. So now these 2 companies are controlled by the parent company. So these 2 people are treated as related. Okay. So then next one, point number 7. Together they control a third person. There are 2 companies. Individually, one company is not controlling another company. For example, X Limited invested 30% in A Limited. Y Limited invested 22% in A Limited. Together X Limited and Y Limited has invested how much? More than 50%. So together they control a third person. So therefore they both are treated as related. Who? X and Y, because they both control a third company A. So because of which X and Y are related. Then point number 8, they are members of the same family. Family already we discussed, that is spouse and children whether or not dependent, parents, grandparents, brothers and sisters if they are wholly and mainly dependent on that person. Point number 9, sole selling agent. Sole selling agent or sole distributor or sole concessionaire, by whatever name called, will be treated as related. Okay. So these are the 9 meanings of relationship. So in this case, employer-employee is treated as related. Therefore, in case of related party transaction, we need to do the valuation as per which rule? Rule 28. What does rule 28 says? Open market value. So that's why we will take open market value 80,000 rupees. So actually so far outward supplies whatever were given is related to that related party transactions. Okay. Now, so all these figures are exclusive of GST. GST is 18%. Calculate the amount of GST payable. So therefore, what is the gross GST payable? 6,92,100. Half of the question over. Now, next one, input tax credit, related to input tax credit. Please see. Above figures are exclusive of GST. He want to avail input tax credit of balance available in the electronic credit ledger, opening balance 22,000. So that can be carried forward. For how many years input tax credit can be carried forward? There is no time limit. Input tax credit can be carried forward for n number of years. There is no restriction at all. It can be carried forward. It is like Lord Hanuma. There is no death for input tax credit. It can be carried forward and adjusted for as many number of years as may be possible. Whenever there is a transfer of balance, okay, transfer of business, then the ITC will get transferred. So that is given in 17 subsection 3. 17 subsection 3 says that whenever there is sale of business, transfer of business, amalgamation, merger, or death of sole proprietor or any reason, whenever there is a transfer of business with specific provision for transfer of liabilities, the unutilized credit in the books of the transferor will be transferred to the unutilized credit of the transferee, and for this purpose one ITC 02 needs to be furnished. And here very important point, remember, transferor and transferee should be in the same state, then only the transfer is possible, which means ITC can be transferred. Whereas, in case there is a closure of business, then the ITC will be lapsed. Until that point of time, there is no death for ITC, it can be carried forward, okay. So here there is a opening balance 22,000 that can be taken. Fee paid to a chartered accountant pertaining to tax audit. Tax audit anywhere in the block credit, it is not there in the block credit, and it is used in the course or furtherance of business, so we can take ITC with respect to this. Then, so 22,000 and 3,600, 22,000, 3,600. Then next, food and beverages. Food and beverages is blocked credit, and we don't have any exceptions here, so ITC not available. Motor car purchase for official use of employees. Car is a block credit. Capacity does not exceed 13 and it is not covered under exception. So it's a block credit. ITC not available. Motor car purchase for private use of extended family. ITC not available. Membership of a club, health and fitness center. ITC not available. Fee paid to a consultant pertaining to transfer pricing matter of a client. So amount paid GST 20,000. Yes, that will be available. Okay. So now we got the net GST payable. So 6,92,100 minus this input tax credit, remaining is the net GST payable. Okay. So that is with respect to this here.